Well, thanks for joining us again. We're back here on Wall Street Silver. Today we have Florian Grummes. He is from Midas Touch Consulting. He's a professional full-time trader who's been studying the gold and silver markets since 2003. How are you doing today, Florian?
Hey, gentlemen. Thanks for having me. I'm doing good.
We wanted to get you on because you're a well-known commentator and student of the gold and silver markets. What is your outlook for silver and gold for the rest of 2021? I mean, we've talked about the short term. Do you have any actual targets for the rest of the year?
Well, first of all, gold needs to clear this 1950, 1960 resistance zone. It failed at that level back in early November last year, as well as in early January this year. And 2 times we've seen a big sell-off. And so I think this will still take a little bit more time and actually quite some work from the bulls before we can clear that level. And then, then I expect an attack towards the $2,000, which is a round psychological number. And then, of course, the all-time high at 2,075. So in the best case, we're going to see new all-time highs maybe in the fourth quarter. Otherwise, we at least will regain the $2,000 level towards the end of the year. And then that would basically give gold the opportunity to do new all-time highs in the next year. And with silver, we all know the $30 level is the big resistance, the horizontal resistance. I think it won't take too much time more, but maybe another 2 months before we can sustainably break through. That would be actually, I think that's even my worst case scenario already for silver right now. Overall, again, most of the time you want to be patient, not expecting too much from the two metals, and then it's much better to be surprised on the upside than on the downside, right? So being a little patient here, both metals probably will pull back to their 200-day moving average over the next few weeks, and then I expect a strong summer rally.
Lee?
So let's talk about the US dollar. Do you see it strengthening further and kind of depressing gold and silver a little bit, and then kind of reversing where you see precious metals kind of going higher in the summer and maybe the dollar going softer?
Yeah, I mean, it's really tricky with these fiat currencies. You know, I generally don't care too much anymore what the dollar is doing against the euro or against other fiat currencies. But of course, as we've seen over the last 2 days, again, a little bit of strength in the dollar can immediately lead to some profit taking in the precious metals. And then it depends how leveraged are the players in the system, how much of a waterfall sell-off do we get. We did get one, a little bigger one yesterday, but you see today, due to the weak job report numbers, gold is up again, recovering at least, I think, a third or nearly a third of what had been lost yesterday. So I think overall, it's difficult to say what the dollar will do because they're all printing. It's a worldwide race to the bottom, right? I mean,
it's who can devalue their currency the fastest, really, right?
Right, and I think, for example, the Chinese have been the most aggressive ones, right? The Europeans are also very aggressive. The Americans are basically still a little bit behind, if you want to say, because if you look at the balance sheets of the central banks in terms of each of the GDPs, so I think the Americans are currently around 36% of the GDP, while the Europeans are already at 77%, and the Japanese are at 134%. And from China, there is no clear numbers that you can trust anyway. It's
just completely mind-blowing stuff, isn't it?
It is.
Well, you almost get the opinion they're all devaluing, but relative, if you look at them compared to each other, they're not moving that much, but they're devaluing. It's like sort of fooling the population. They're not realizing their currencies are being devalued because we always compare the dollar to the euro, and they're both doing it. So you're not really sure who's screwing you, who's really getting screwed here. And Canada's doing it. I mean, all the major currencies are doing it. So I wonder sometimes if the central banks get together and say, all right, hold on, we got to balance this out a little bit. Let's we can't let you get too far ahead, otherwise it looks bad. I don't know if any of that.
Jim, I'll bet you they do that on a daily or weekly basis. That's
Yeah.
my speculation on it.
At least I think at least the Europeans and the American central bank, they talk with each other for sure, and they make sure that at some time it's the Americans so maybe devaluate faster, and other times it's the Europeans. But also, of course, they have some mandate to keep, so to speak, stability in each of the economies. So, I mean, we've seen this here in Europe. Madame Lagarde, she's like printing like crazy all the time. Every week there's a new all-time high in the balance sheet of the ECB. And yeah, I mean, this is, I don't think this will ever stop. I think it will just, accelerate over the next few months and years.
Well, you're based in Germany. You know, the Germans have it in their DNA to avoid this type of activity. Is there a lot of stress in the German population related to what the European Central Bank is doing to their currency? I mean, are the commentators, the business commentators, are they, you know, screaming about this, saying you crazy lady, and you know?
Of course, it depends on who you're listening or what you're reading these days, right? So the mainstream media is not reporting too much about it. I mean, they're all surprised that suddenly inflation numbers are picking up. While, I mean, most of us in the gold and silver sector, we've been saying this for years, and we all look at the commodity prices, and it is no wonder that at some point your breakfast will become more expensive with all the prices for coffee, for wheat, for pork, for whatever. It has been rising up, I think, at least 50% over the last 1 or 2 years. So most of the mainstream media don't really talk about it, try to avoid it, or use those kind of like fake statistics. We all know that. So the CPI number, for example, is not something that you really want to look at to understand what's going on. It's not reflecting your real life in terms of prices and inflation. And but we have a strong, vibrant gold bug scene here in Germany, of course, for many, many years already. And basically what's happening now, like with you guys, for example, where lots of people catching up, creating a big network in North America. This has been going on here in Germany for a long time already, but it's more within those German-speaking countries. So Germany, Austria, Switzerland. We have yearly conventions where all the mining stocks actually like to come from Canada and America. And of course, as you rightly pointed out, most of the Germans somehow have memories ingrained, or at least heard them from their ancestors, myself too, of course. So most of the people lost everything in the German hyperinflation 100 years ago. And yeah, back then, even I think the government told the people, give the gold for iron. So they wanted to have you hand in your gold and silver to the government so that the government could buy more weapons and pay the soldiers during the First World War. And yeah, this is kind of ingrained, and that's why there is a vibrant scene here in Germany, but still it's a minority, of course.
I was told that there's a major convention there in November in Munich, and I've been told I need to go there. And actually, 5% of our, I've looked at the statistics on YouTube, 5% of our audience is German in Germany. So we definitely have some people watching from there. Are they likely to have it this year, or is COVID canceling those things still?
That's a good question. It was canceled obviously last year. Hopefully it will happen this year. I have no real news at the moment, to be honest.
Yeah, gotcha.
But it's a big, nice convention happening since, I think, nearly 20 years, 18 years or something. And it's been always a great get-together. Lots of people from the German-speaking scene, also international people talking about gold and silver, and of course about freedom and Austrian economics. And all the mining companies are usually coming over to present themselves. So it's a great get-together here in Europe.
Gotcha.
Can we shift gears a little bit and talk about crypto and how that's affecting precious metals? I mean, we've seen tremendous weakness in both Bitcoin, Ethereum, and the rest of them in the past, say, month or so. Do you think people are shifting out of them and going into precious metals now? Do you think they're going to recover? What's your view?
Yeah, I think that certainly some of the money that would have flown into precious metals had been basically going into cryptocurrencies on the way up. And yeah, at some point the market was overextended. And yeah, we had this liquidation wave basically since the Bitcoin couldn't make new highs. You've seen Ethereum doubling in a few weeks, which is usually a signal that the cycle is coming to an end. You had quite of these so-called shit coins, if you want, right? They all went through the roof in the last few days before the crash. So that's a typical signal that a cycle came to an end. There is an open gap in the Bitcoin future at around 24 to 26,000. And I wouldn't be surprised if the market wants to go to that level and close it. But we also have an open gap on the upside around $49,000 in the futures Bitcoin contract. So my thinking right now is that we probably first close the gap on the upside and then go lower. But I'm not sure. I think right now Bitcoin is doing some form of a triangle, and the pessimism is very high. So I think a further bounce or recovery is more likely than a continuation, a direct continuation of the sell-off. I also think that towards the later of this year, end of the year, we will see new strengths in the cryptos. I don't think that we are in for another 2-3 year long crypto winter, simply because we are more and more in this end game of the cracker boom. Things are accelerating. The currency expansion is happening faster and faster. So, and I think actually that trumps everything else, all the deflationary forces that are in the markets without a doubt. But the currency creation is the strongest, and this basically shifts everything towards inflation. So I think, yeah, give it a few months, maybe more of recovery and then another sell-off. But towards the end of the year, I think you're going to see strength in cryptos again. And I never bought into that theory that it's either or. I've always said you want to have gold and silver, and you also want to have some crypto, and especially Bitcoin, as a protection. And I think that they basically, complement each other very well. Since you have the safe haven of gold and silver for the last 5,000 years, survived any king and emperor, any dictatorship, any crazy war, whatever. And on the other hand, you have Bitcoin and a few selected really good cryptocurrencies that are decentralized, new technology, basically a call on the future. So I think the mix of both of them is very interesting. And of course, at some point, most of the time, Bitcoin has outperforming gold and silver rather mercilessly, but you also have these phases, and I think we're in such a phase right now where the precious metals are outperforming.
You know, there's like 10,000 of these cryptos now, all the shit coins that they call it. And, you know, the big argument in favor of Bitcoin is, oh, it's limited to 21 million. It's never going to get bigger. But then but it's just so easy to create new coins with newer technology. And the big complaint about Bitcoin is, you know, it's slow, you know, limited number of transactions per second. And other crypto coins like have fixed that. And so I sort of wonder, is this going to become the next new, what's, you know, Bitcoin version 3.0, Bitcoin version 4.0 that fixes all the problems with Bitcoin? Does something like that make Bitcoin obsolete in the future?
Well, generally it can happen, of course. I mean, nobody really knows what's going to happen in the future, but the brand of Bitcoin is so well established.
Yeah.
Everybody knows it. The network is huge. Look, there have been so many good search engines available besides Google back 20 years ago. But somehow it's been Google, and still you will find much better search engines than Google, right? But people stick to Google because it's the best, most well-established one. Everybody knows it. It's a huge brand. It's supported by all the other websites. So that's one factor that you need to consider, and Bitcoin has been being around for 10 years. It's been a super stable, yes, old school, old kind of like technique blockchain, but it's been working rather flawlessly. Also, this is actually something I have to add to this crash just recently. I mean, nearly all of the decentralized exchanges, as well as all the transactions, have more or less happened well. So the system didn't went down during a nasty crash. Yes, the typical big exchanges were not accessible during the time, but that's also not where you want to be basically with your coins. So I think you have to consider that Bitcoin has the largest network, is far ahead of most of the other coins, and it will take a lot of work, luck, money, energy, etc., to establish a coin similar strong as Bitcoin. So I think it's really far ahead than everything else.
Can we talk a little bit about the equity markets? I mean, how much of that is the money printing?
I think that it's all about the money printing these days. It's, I mean, imagine if they would stop, everything would break down immediately. And of course, that's a frightening imagination, so to speak. But I don't think that they will do it. It will cost them their job immediately. Nobody has the balls to do that. So they will simply continue, and they will be actually forced to continue this in a bigger and bigger fashion and in a faster and faster way. So that's part of the crack-up boom theory, that they are forced to expand the balance sheets continuously. And this drives everything higher. And so I've been always saying that I think the crack-up boom is really the best explanation for what's going on. Because people don't get it together. We've been in a lockdown. Most of the people at home, lots of businesses closed or even went bankrupt, and still stock market making new all-time highs, especially in America, but also worldwide. So
it's crazy.
It's crazy. It doesn't make sense if you look at it, right? But if you understand that this is all driven by liquidity, by the confetti party that is being created by all these central banks everywhere, and that the money, of course, chases assets now. Yeah, we have asset inflation for many years, basically since the financial crisis in 2008. This has been an ongoing trend, and I don't see it changing. I mean, we might have a few breathers, a few crazy pullbacks, crazy volatility, similar to what we've seen now in the crypto sector, similar to what we've seen, for example, last year in September in the tech stocks, and similar to what we've seen recently in the tech stocks. Then people freak out like crazy, and immediately the Fed, the ECB, they all jump in and provide more money, liquidity out of thin air. And this is going to continue. And now people are becoming more and more aware that prices are rising. So you will see that inflation expectations basically getting out of control. And now the thinking is, it's better if I buy now instead of waiting a year, because in a year, everything might be much more expensive. Better to buy it now. And that will fuel even more rising prices, rising stock market, rising real estate prices. Yeah, even prices for old timers, rare stamps, art collectibles, everything's going higher. And we all know that the precious metals sector basically would be the most clear indicator for inflation, and that's why they always try to slow it down or create those big sell-offs. But I think it will come, and silver, about what you guys especially are talking and interested in. I mean, silver is super sensitive to inflation, and I think it will outperform most of the other assets over the next few years.
So, the big news for later in June and early July is going to be Basel III. That's what everyone's talking about with regards to the changes in rules for gold from a tier 3 asset to a tier 1 asset. But I've heard you interviewed before that you don't think that this is going to have any sort of near-term impact. You think this is, it's not a one-day change, right? It's something that has to be gradually eased in. Is that still your view? And explain to our audience why.
Yeah, I think this takes time. This is not something that the asset managers in those big institutions will shift their assets immediately from one day to another. This is a gradual process. Once they realize that this works, that they can use physical gold investments to deleverage basically their balance sheets, to get a better rating from the central banks, then that will step by step happen. But I don't think it's something that will happen overnight. This takes 2-3 years probably. But you will see the effects step by step, and that will, in my opinion, create physical gold demand from European banks and even from central banks. We know that the Indians, the Russians, and the Chinese central banks have been buying gold and basically hoarding, accumulating gold. But we haven't heard that from European central banks or European institutional banks. So that could be a big shift, yes.
China seems to be importing and hoarding just a massive amount of gold in recent years. And Russia is doing the same, reducing their US dollar exposure. Why haven't we seen the Western governments also rushing to add to their gold reserves? Like some of them have done it on a smaller scale, but not at the same level that China and Russia. It's like they're not realizing the game that's going on here in terms of a currency reset and taking the same sort of precautionary steps that we see China and Russia taking. Do you have any thoughts as to why?
Oh, well, I mean, for example, 20 years ago, the famous Gordon Brown bottom in the gold market. Yeah, so Gordon Brown was the finance minister of UK,
yeah.
And he managed to sell the British gold reserves right at the bottom of a 20-year.
Brown spot, yeah.
Yeah, and a few years later, then even here in Germany, the left-wing government back then under Mr. Schröder, they tried to also sell all the German gold reserves. And the Deutsche Bundesbank, which has always been one of the best central banks back in the days, a more conservative one, they managed to avoid that crazy move. But now it's the European Central Bank. They are based in Frankfurt, but they run a completely different policy than the Deutsche Bundesbank. So they don't even, I mean, of course, they don't throw the gold to the market right now, but they really believe that what they're doing is right and sustainable, I think. So if you listen to Madame Lagarde and all those people, they really believe that this makes sense and that they can continuously expand the balance sheets by simply creating, digital numbers out of thin air without any consequences. This is
Christine Lagarde is actually, from her political background, she was a socialist, right? Correct, in France, part of the Socialist Party before she rose up to the IMF and ECB.
Yeah, I mean, you wouldn't be a socialist if you understand economy. So,
yes.
So unfortunately, only socialists running the governments and all these institutions nowadays, and therefore those people have no clue what they're doing, and they are not able to see the consequences down the road. And that's why they simply continue. Otherwise, of course, I mean, look, the German taxpayers have to basically support all those other countries here in the Eurozone. I'm a big fan of Euro. I'm against the European Union in the way that we're having it right now, because it's not sustainable. It's not fair that one country has to pay for all the others. And it doesn't give you any incentive to run your economy on a sustainable, good basis, because all you do is I spend more, okay, then the Germans have to give more collateral and we spend more and we spend more. In the end of the day, everybody's broke. So, but they continue with this. And I would, for example, say that the Italians, long time ago, they should have handed in their gold reserves as a collateral if the German taxpayers support all these countries. The same is true for Portugal or Spain. Unfortunately, they don't have a lot of gold. So,
Italy does. Italy does have some significant gold reserves, don't they?
They do. And actually, if I would suggest that the ECB should immediately put together all the gold reserves in the eurozone and use that as backing of the euro. But this is something that these people don't get, you know. So.
I don't think the individual central banks in each, you know, the Bundesbank, they're not going to give their gold to the to the European Central Bank. I mean, that's
if you really believe in the concept of euro,
yeah.
and you want to bring this further ahead, we need to have a stable, sustainable money supply and a money system that works. And we don't have that currently. And people just believe because it has worked over the last 20 years, it will continue to work like this. But we are now seeing that the purchasing power is diminishing rapidly. And I'm saying, I think if all the European countries would bring their gold together and use it as a collateral, or at least as a form backing the euro, yeah, the game would change immediately. But of course, as you rightly pointed out, most of those countries wouldn't be willing to do it.
But, you know, is it really, that leads into the issue of whether the euro itself is sustainable, having countries like Greece, Portugal, Spain, and Italy in the same currency as Germany, Denmark, you know, the more efficient, the more competitive economies, whether that's long, is there any, I mean, that's perhaps a debate for another day, but I question whether or not it's ever going to be viable to have such different countries in the same currency zone.
No, I mean, if you have, for example, VAT numbers, if you have different tax laws, if you have different laws in many areas, it won't work. So what they will have to do is basically bring all those countries on the same page. This is a long process, and many of those countries don't want to do that, which is understandable as well. Yeah, I mean, you can make the argument that it's been a surprise that the euro is still alive. But then again, I mean, those fiat currencies simply continue to exist because the people believe in it. So
yeah.
Unless the confidence reaches or drops to a certain threshold, a critical threshold, yeah, most of the people just continue because they're so trapped in their little life, in their 9-to-5 workshop, and then coming home, watching TV, drinking a beer, and it's all about making ends meet every month. And then the next morning is there already. There's no time to think about the system and if this euro that you run for is really sustainable, you know. And I think this is true in most countries in this world. It's the same is true for America, right? I mean, most people are not aware how, I mean, what a joke this whole thing is. You spend your whole life running behind some paper bills that have no intrinsic value.
Yeah. You know, talking about the EU, they've been very verbal in the past couple of weeks about developing a digital wallet and digital euro. And if you remember when they were coming out with the euro originally, they were talking about backing it by gold. So, and clearly they're transitioning from the paper euro into something that's similar to the digital dollar that we talk about frequently on this show. What are your thoughts? You think it's going to be something they're going to be able to pull off and just shift people from one physical fiat to one digital fiat?
I mean, we basically having already digital money, right? I mean, all of your euros and your dollars are basically sitting somewhere in a digital bank account. You do digital transactions. The difference might be that what they're planning to introduce, might give them more control about your money, right? So it could have an expiration date because you didn't behave well. You passed the red traffic light, or you said something wrong on your YouTube channel. And that could basically lead them to say, sorry, your money is worthless now, or you're not entitled to receive 1% interest rate, or you cannot use it outside the country, or whatever. So these kind of things, I mean, this is like still frightening to imagine, but they're working on it. And I don't know how this will all play out. it's actually very frightening. And I hope that enough people wake up to stop them. But obviously the lockdowns have created such a dire situation for many people that they will be grateful to receive a few thousand newly created digital whatever euros into their account, because they're bankrupt, they're broke, they desperately need money. Many people, I mean, it's already more than the half of the people here in Germany is depending on the state. I think it's 15% probably of the population who are still creating something. The rest is basically receiving social welfare. Yeah, it's crazy. It's a crazy setup. It's very frightening. I hope that Bitcoin and gold and silver will help to protect us against this craziness.
Yeah.
Because if we end up in a situation like in China with social credits, and then you walk through over a red traffic light and you immediately get penalized, it's weird. And this is just a soft imagination, you know. If you stand up for freedom and liberty, you will get it. So no, I'm completely against that.
As are we.
Well, you know, Florian, thank you very much. This has been a great interview. I've really enjoyed talking with you and getting your perspective, the European perspective on what's going on in all this. We'd love to have you back in perhaps 2 or 3 months and continue the conversation, as I think it's developing into an amazing year for gold and silver and everything going on with our crazy central banks. And let's update with you in a few months and see how things are going.